Hey everybody, we just made the retirement budget calculator so much easier for getting started, and I'm going to show you how this works. We call this Quick Start, and we also simplified the process for entering your paycheck or your pay stub. So if you're ready, let's dive in. Okay, so let me show you how this new process works. So we'll create a new model. We're going to create it from scratch. First thing we need to do are create our hypothetical couple. So we're going to call them John and Nancy. I'm going to say he's married. His birth date was 06/01/1965, and he's going to be retiring on December 31st of 2030, and he lives in Washington State, we'll say. We'll save that. Now we get to enter Nancy's information. We're going to say that her birthday is April 1st, 1965, and she's also going to retire on December 2030. And we're going to say that she lives in Washington. Okay, so now we've completed the first step. You'll notice you have Finn here. Finn is your AI financial assistant. He lives up here in the corner. He's there to answer any questions you have about how to use a calculator or just general financial planning questions. You can ask him questions about Medicare and Social Security and the IRS tax law. Just a wealth of knowledge and information there. And Finn guides you through this quick start process. So you'll notice he says, please review the people you have added to this model. Press next step to continue. So now we are in an area where he says, okay, now let's start entering information in about the accounts that you have. So in this case, we're going to say that they have a checking account. They have $5,000 in there. And we're going to say it earns a 0% interest rate. And then we're going to say that they have a 401k. It's owned by John and it has $500,000, and we'll keep that assumed 4% growth rate on that account. We're also going to say John has a Roth IRA, and we'll say he has $150,000 in that account. And then we're going to say Nancy has a traditional IRA. It's owned by Nancy, and that account has $300,000. And for now, those will be all of the accounts that we had. So we've entered the accounts that they own. The next step is to enter any information about their house. So they have a primary residence. We're going to say it's valued at $650,000. We'll assume that the house, the real estate, only grows 2% per year, just to be really conservative. No more real estate, so we'll hit next. Now they ask if you have any liabilities. We're going to say that they have a home loan. We're going to say they owe $650,000 on that. It's 3.75% is the interest rate. When we do that, it asks us if we want to create an expense for that home loan. And in their case, we say yes. It's $3,000. It's going to be paid monthly. And then we hit save. That's an essential expense. That's the only liability they have. We hit the next step. Now we can either do a detailed budget or a basic budget. And this was one area that was throwing people off because the detailed budget does require a lot of information. But in their case, we're going to say a basic budget at this point, and we're going to enter their income and their expenses. So this new paycheck section is an area that we added to simplify the process of adding your paycheck. This is what your paycheck might look like. You have your gross earnings and then maybe some employee life insurance, pre-tax deductions, taxes, after-tax, employer contributions, and then we kind of summarize it in the spreadsheet. But what I'm going to show you is how you can use this new paycheck entry to enter all of that same information that you might have on your paycheck. So we're going to say this is John's paycheck. His gross wages are $10,000 per month. His life insurance is $100. That's imputed income. We're going to say his 401k, he's contributing $500 to his 401k. We'll find that account. He doesn't have a pension. He has health insurance benefits. He's paying $350 for that. No other pre-tax deductions. Then we're going to enter the federal tax that he's having withheld. So $2,000 for federal taxes, $500 for state income taxes. He's not paying any local income taxes. He has Social Security that's $620 a month, and his Medicare is $145 a month. Again, all this information is detailed, should be detailed on your pay stub. He's making after-tax Roth contributions of $1,000. We'll add that to the Roth IRA that he has. There's no other after-tax contributions. And then his employer is also making $500 per month contributions into his regular 401k. So we'll add that. And down here at the bottom, it shows you the summary of his paycheck. So $10,000 gross plus the life insurance minus the before tax deductions gives him a net of $9,250. Then we subtract out the taxes and the after tax contributions. That gives him net income of $4,865, and then his employer's contributing $500 per month to his 401k. So when we save this information, you'll notice what happens now is over here all of these entries were created. So here we have his paycheck, we have his other non-cash benefits. This is the life insurance, 401k contribution that his employer's making. We have the deductions and contributions all being added to the correct area. And then we also have the federal income tax being withheld. And remember earlier, we created that home loan payment for them. So the next thing that we want to add in their case is in the future, we're going to say that he's going to have $3,000 a month of Social Security. We'll assign that to John. And then down here, we're going to say that starts at his full retirement age 67. She's also going to have Social Security. Hers is going to be $2,000 per month. Belongs to Nancy. And again, we're going to start that at her full retirement age of 67. And that's all. That's all we have for income. The next step are any additional deductions and contributions. So if you're adding money to any other kind of an account, you can add that here. Now for expenses, what we've done is we've allowed you just to put $1 amount in. You can go through and be more detailed on all of your essential expenses, or you can just say all expenses. So let's say you know that you're spending $5,000 a month. Those are the essential expenses that you can't live without. And then you're also, all of your discretionary expenses are another $2,000 per month. And those are automatically added to discretionary expenses. So now we have essential expenses, the home loan, and discretionary expenses added. Now we go to the next step and it says, congratulations, you've completed entering the quick start process. So if you ever have to stop as you're going through this, you can come to the dashboard and resume the quick start process. But in this case, we're just going to say, take us to the next step. And the first thing you'll notice here is the retirement confidence score. So based on Monte Carlo analysis, running 1,000 simulations, you can see that based on the fact that we're assuming they start out with a 50% stock, 50% bond portfolio, they have an 86% chance of success. We show what their retirement benchmarks are. We show how their money is going to last over their lifetime. We show what their net worth is. We show how that lifetime net worth is going to change over time. We show what their budget is and how that's going to change over the years. And then we show lifetime taxes based on this plan that we've created. Of course, we can always go to the Retirement Optimizer to see how their plan is going to work. But the most important thing I wanted to demonstrate in this video is the new Quick Start setup. So you can just really quickly, within maybe 5 to 10 minutes, get your initial retirement plan created, and then also the new Paycheck Entry to make it really easy to just take the information from your pay stub and enter it directly into the retirement budget calculator. Okay, thanks so much. I hope you found this helpful.